Good morning, everybody. Well, we knew buyers weren't going to give it up easy. I was hoping prices would pull back to that 20 MA. And with the craziness yesterday up and down, it didn't happen. Buyers are so anxious, I guess bullish, to buy this market. They came in the area of that minor support there. So could this be a continuation pattern? Sure. This morning's down move is really not a big deal. Part of what I discussed earlier in the week was something's wrong with my sound. Hold on. Let's see, make sure it's on the mic speaker. No, I'm on the microphone. How am I coming through in the chat room, everybody? Audio's fine in the green room. Okay. All right. Maybe something with YouTube or I don't know. Out of my control. All right. Thank you, Gerald. All right, cool. Thank you. Thank you, everybody else. So I didn't want to see, of course, this is my point of view. It doesn't mean the market can't go higher. It is at this 4,200, the S&Ps. It's not SPX, so not as important. But what I discussed was a pullback toward this support area would leave sufficient distance to this high, or sometimes it takes out the high. So, the reward to risk where your stop is and and so on is favorable versus being so close to this resistance. So my preference doesn't mean it has to happen that way, but we'll see. You just don't like to be close to where sellers were showed up before. And it's right here. Now, if the buying demand is strong enough, it'll push through that and go to the next level, which on the S&Ps would be that pivot high up there. Ideally, when we have a move like this up to resistance, just looking at the weekly chart, and all concepts are universal to all time frames. Just adding that. This bar would be a consolidation week, inside bar, and then maybe the next week could rattle around a little bit, and then it would push higher. The concept there, the idea is that we're getting bullish price action at resistance where, yeah, it's a little extended, but it's chopping around here. It's building a new support point where prices can move up to the next level, rather than continuing to go up where, buyers are just over enthusiastic. And as the further prices go up without any kind of a meaningful correction, more so a pullback versus this kind of sideways stuff, the greater the probability of a bigger correction. Common sense. And we talked about the fact that sentiment is up here. Historically, that's not good. Breadth has been deteriorating. And that isn't totally bad, the breadth, meaning breadth deteriorates when prices consolidate. The S&Ps don't really show that consolidation, but there's lots of things that pulled back a bit, and certain stocks pulled back a little more than others. And those might actually be the ones that are better buys. One of them that I mentioned in the room yesterday, which of course has to trade above a prior bar's high, was Snow, that had pulled back a little bit further. I got to talk to eSignal. When I haven't typed this in here on this particular platform, I guess yet, so it's got to resolve. It takes a while. It should do it instantly, but once it does it once, it's good to go. So here, like this one is pulled back toward the 200 and the support. So while the angle of retracement is a bit steep, but it is coming out of a bottoming pattern. So that's not unusual. And so if we were to get a little bit of consolidation here, where there would be like a third bar on the daily chart. And what I like is, on the hourly here, it gets like maybe a retest, and there's a greater probability of a bigger move. And that's what I'm talking about, a bigger retracement where you get a buy setup and it's got a greater distance to where the sellers are going to be more aggressive. All right. So where are we at here? Other than the S&Ps, we always look around the top of the green bar yesterday. Not a big deal. meaning any kind of corrective price action that's going on here. Yesterday's move off of the low, prices are extended intraday short term. So a consolidation day would make sense, especially in front of more economic news that's coming tomorrow and Friday. So consolidating today's gain, waiting for the news. Odds are it's going to be a choppy day. Right? So with that being in mind and thinking about credit spreads, SPX, that's favorable. Take a look. And I initially wrote down, these prices change. I initially wrote down below 4,100 and above 4,200. So the whole numbers. And 4075. Right, McGraw's got 4080, but I see 4075 has got enough premium there to do it. Yeah, I mean, you can go for the 4080. That would probably be safe. 90 by a buck. It's, it's below yesterday's low, which should be fine. A little less and a little greater probability of any heat. I don't think this is going back down below yesterday's low. That would be so obvious that yesterday failed. And I don't see any reason as far as news-wise that's available to us that yesterday's bar should fail today. And then, above 4,200 because of the bullish bar, could they push it above there? Sure. So this one should be the no-brainer, especially since things are down a little bit here this morning. There may be a little bit more selling because of the advance that happened there. And 4,200. It's not worth it. I don't think 4,205. It could easily peekaboo above there today. So it doesn't make sense. Doesn't make sense. So 42, 4080, 4075, your pick. Yeah. All right. So the risk besides sentiment is what we talked about, what we were anticipating was going to happen. It was like taking forever, how many weeks it spent down here, but it had to do the little blip below the low, the little fake out move and reversal. So the risk as far as longs go are interest rates. Right? This is positive. It got through these pivots. It looks like it could jiggle down a little bit, which would help the market go up. But if we were to get some kind of continuation pattern that goes up, I think you better get out of the way of the sellers. In addition, the dollar did the same thing in this major support area. We were waiting, seeing it would turn, and there's the turn. And so, you're not doing anything here today. So that risk of the dollar going higher and interest rates going higher today seems not to be a concern. And the other things that we're going to look at are going to be the same as S&P's consolidation day. It's at resistance. That's all going on. The Dow we know is like a giant mess. However, through that mess, it's holding up relatively well at this resistance area so far. We had the same craziness yesterday. And the Russell is a bit more constructive. It's still too close for comfort, I think, being near this prior high and the weekly chart, the same thing, being up near resistance. It's just not a good scenario with sentiment being where it is, the dollar, interest rates, as bullish as this pattern looks, the intermarket relationships and the market internals aren't one in which that says, hey, this thing statistically, based on historical patterns and arrangement of the intermarket techno fundamentals, as we call it, supports being of a bias that this thing is going to go significantly higher. And not without some more corrective price action, which, as you look at the higher time frames, just seems like common sense to me. That whole number there. It's the same no matter where we look, right? But if it can consolidate a bit more, which just based on the weekly chart here, especially in tech land and the Qs, could take a few weeks, and a dip down to 300 or below could be a good opportunity where, the internals correct themselves a bit more, and it'd just be a heck of a lot better scenario for more longs than what we have right now. I was looking at the other markets that we do. Silver got pounded down. Maybe that bounces a little bit here with a pattern like that. Gold. We talked about this when it was going up. When the dollar makes the turnaround, likely it was going to, this was going to come down. You have to know that intermarket relationship. Oil's bouncing up a bit. We talked about with the dollar, with interest rates, oil coming down into this area. If it started to bounce, there's going to be more talk about inflation and, of course, how that relates to the Fed and all that, and the whole, tea leaves that we look at, the techno fundamentals thing coming together to support some kind of larger corrective price action within the bullish move that preceded it. So I think that's about it. I just always look at the transports, and they look great. So with the short-term bearish view, assuming the dollar and interest rates go up, there's plenty of positives there, as long as whatever corrective price action happens, things don't get out of hand. It's supportive of markets and tech land and so on going higher, like semiconductors. They had a big move, but things are short-term extended. So again, on the long side, be nimble, raise your stops accordingly. And Jim, SPX on the put side, 40.80, 40.75. All right, a little short for me, but I'll give Dan a little bit more time. If he's with us. There he goes.
All right, good morning. I had to get the mic set up on the other computer. So ready now. Yeah, so that's our bias. Yesterday we got another wild turn with Powell talking, and I didn't listen to it, but hear whatever he said, it came down, and then I think the Wall Street Journal kind of summarized it and then said he started just talking disinflationary again. We had this incredible greater than 100% retracement. So just eyeballing this, we're gapping down a third. So this will set up an ideal of 1, 2, 3 if it sets up. Now, I know Greg talked about, hey, coming in and getting deeper and that helped the internals, all that stuff, which I totally agree with. But when I get retracements like that, I like controlled ones. If we now take out yesterday's low, then we had a nasty 180 reversal, which is going to, in my opinion, just make it difficult to get that beautiful retracement. I will take it day by day like we always do. So when Greg was talking, I guess, wait, no, not Microsoft. All right, so Microsoft's been on a tear here because of, I guess, this AI stuff. Still going. I don't know what's up with Google here. I don't know if this is the antitrust, but the antitrust was out earlier in the morning with the ATVI. Look, we're trading at 102. That's under this bar. That's a nasty bull trap. So that's a call spread candidate. So ATVI, this was on a wild ride, the day before earnings, which was yesterday. And now we're capping down again. So this thing's, you stay away from this for a swing trade. This is some wild action. Let's see, earnings trades. I didn't give any official, but I did a few, and we've talked about them in here, of course. I did KC, the 290s. So it's gapping down here a bit. 332, so it's a bearish gap into this bar. But I'm pretty darn confident my 290s are going to be fine. I did Herb. Herb, I see one, no, that's only one print up here. So, you know, when I only see one print, the best way to get market value is look at the level 1 screen. And it's right in the middle. So I can't trust that. I can't trust that big gap up, but I got a put spread on that, and I got one on Pru. Another gap down, but I got the 97.5s. I think it's going to be totally fine. So not, as of right now, I'm not worried about any of those. I just sent an alert out a couple minutes ago. We're short Sherwin as a sell setup, and it's gapping down here. So I'll be looking to take some partial profits, either into weakness or, I don't know, 5, 10, 15-minute high or whatever. Oh no, this drilling is starting again. Oh man, hopefully you all can't hear that. The green room said yesterday they could not hear it, but it is so friggin' loud in my condo right now. All right, let's go up here to earnings stocks. Vertex gapping down through is not good today, but yesterday it was fine. There's nothing I can do about it, so I apologize, but okay, thanks, Stephen. All right, thanks. Now it's messing with me. So gapping down here to 304, nothing really to do. These are all earnings trades looking for new trade opportunities, trading stocks or options. This one's gapping up into resistance. CMG. Oh, Greg, it can't be internet because I got the mic on the hardwired computer. CMG, this is another bull trap. Things that rally into earnings, and we're gapping under 4 bars. That is an ugly. I don't know what to say, guys and gals. It's identical setup to yesterday.
Sounds fine right now, Dan. It's like when the internet can change day to day, meaning as it goes through wherever it gets, sometimes something happens and then it goes away. It's that kind of thing.
All right, CMG, let's watch this 30-minute low, day trade short, call spread, and also watch it on a bounce for a sell setup. I'm gapping up $60. The gap's too big for me, but that's bullish on a pullback. Pru, we talked about. I'm in it. Aluminum 207, gapping down. That's a bearish gap, 30-minute low. That's a failed buy setup under yesterday's low. ENPH. Sam, I don't know if you're here. We talked about put spread on this yesterday, just because it's down so much on the daily weekly. So that would have worked, and let's put that on our list for a new put spread. I was going to do one on that, but the premiums were so high that it was hard to get a good net credit. C 57, gapping down to this prior low. I don't have a bias. C, we talked about OMC. That was a very bull. This is an example of bullish consolidation over time. In the upper part of that WRB, it's gapping up $3, too extended for me. AMCR. I don't like the way you trade. You're opening barely flat. ATO, I can't see where you're opening, but it's a sloppy buy setup. You can set an alarm at 117.70 and see what it does. This is opening flat and sloppy. You can set an alarm at 127 if you want. This, let's see, this is a like, it's a very, very strong uptrend, but it's a buy setup that I don't trust when I get far from the 20 is far from the 50. ESS, this is nice. This is a buy setup with a potent reversal. I'm gonna set an alarm at just 231, and if I get a gap up, it's gonna go off with the market open, but that's a nice put spread and maybe 15-30 minute high candidate. Peak sloppy buy setup, gapping down here, sells, I got multiple time frames are not great. Jack Henry, I don't see any volume, but if it shows an ugly gap down to 171. It's a nasty. That's a pro gap down. If it is opening down here, but I don't see volume, so it'll come back. Oh, this crowd, bottom right. We entered this yesterday afternoon. Beautiful buy setup after breakout from a bottoming pattern. These are one of my favorite bottoming patterns right there. Bullish 1, 2, 3 weekly, and it had a beautiful run post market. I said let's just sell it at I think 118.25 last night, but I want to look to get back on the pullback. It's holding up very well in light of the market gap down. All right, CSL, well, kind of similar. It broke out bottoming pattern buy setup. I see one print at 255. But that looks fantastic. I'm going to put that in another window on my other computer. That looks great. DFC selling off pre-market. That's weak. All time frames. Look at the sell setup on the weekly. Monthly can't balance. That stock's still in trouble. Trick. It's just too vertical for me. There's no pattern. I don't know what to do about it. Yeah, Dow was on the list yesterday. Actually, I like it better now, because now it would have to negate the gap down. So I like this better, Thomas. I'm going to set an alarm at 60.65. QGen gapping up 57.6. That would be a no-brainer put spread if there's any juice. CCK 30-minute high, long idea plus put spread idea. NGP strong, kind of like volume. INSP, I don't see any prints, but it's in a trading range with a rising 50. So that is very strong. And 30-minute high put spread idea. AIZ breakout failure 131. So that's just getting smacked right back down into the base. Voya 7250, nice gap breakout, nice weekly monthly. That's a buy on a pullback. Lynn. Yeah, I like the gap reversal yesterday. When things run that much, Thomas, I really prefer a 1, 2, 3. Yeah, I'll put that on the list. EHC is a big mess. Herb, that's room. And thanks, guys. Market's not, I don't know when that comment came out, but the market's not doing anything right now. CBS, hey, here's this is a double bottom now. I like this. It's gapping up from a W bottom. Look at the increased volume yesterday, new low plus. Gapping up deep into resistance, to resistance. 30-minute high. This looks great. Putting this in a window. Gapping up 30. Let's say this one's also gapping up a lot, but it's gapping up more and it's gapping the resistance. So I don't even feel like babysitting it. Uber's having a great day. That's amazing run here from this December low. Amazing. Yeah, it's more like a sausage gap to me. This is kind of a sloppy inverse head and shoulders, but I like the close. I'm gonna set an alarm just 164.70, just so I can let the computer watch the opening print for me if it's up. But if this gaps up, you option sellers who can help me whenever I say XYZ is a good put spread, you got to help me look at the premiums, are they liquid, so on and so forth. But this is a fantastic put spread setup. 164.65. Alarm. CME is gapping up. Another band. This is a failed M top. Snow, I think Rick, that was yours, Snow alarm. Snow, that's good. I have a lot of stocks I'm watching here. So this is a beautiful put spread idea, CME under yesterday's low. That kind of looks like there was some inside information ahead of earnings. All right, so if somebody wants to help me on that, I just think the spreads are going to be ludicrous at the market open on these things with earnings. Yeah, see the 172.50s are 5 cents by 80, so that's totally expected. These jerks, but that's a beautiful put spread candidate, you all. ESS, why did my alarm go off? I'm just going to reset it at 231. This will be a fantastic 1, 2, 3 if it closes like this. My crew, I got a good spread on crew and the spreads are friggin' awesome. Mine's